The bank reconciliation prepared by Winfield Construction on June 30th, 2017 appeared as follows. We had a bank statement balance of $9,200. So this is what a June 30th. So this is we're going to, if you take a look at the end, we're going to prepare a bank reconciliation at July 31st. So this would be an example of a bank reconciliation on June 30th. So here they had a bank balance and their book balance. So where do you find your bank statement balance? Which statement would you find that on? From your bank statement. Your bank statement balance comes from your bank statement. Okay, so in the olden days, you used to get a bank statement in the mail at the end of every month. It used to come a week after. Today's day and age, you can just pop onto your online. You can still get your bank statement digitally or mailed to you, or you can just look at your bank balance as of the end of the month. And your balance, I'm sure we've all checked our bank statement balance a time or two with our own personal banking before we went and spent a few dollars. So, of course, the balance at the end of it. So on the right side is the book balance. Where can we find our book balance? Not our journal, our ledger. Yeah. So our ledger, and in particularly which account? I just said it. Our cash account in our ledger. So the very final balance will be the book balance. What we do is we add to our bank anything that hasn't cleared. So in this case, there's a deposit of June 30th in transit. So again, back in the day, it used to be that when you deposited money in your account, like I'm talking before computers, the record would go through and then it would be sent to some filing organization. It'd take a couple days. But even today, in today's day and age, I can go and drop my money in after 2:30 p.m. If I go and take money to the bank, often I won't see it till the next morning. So even today in 2019, there's still sometimes a deposit in transit. So if I were to walk over on the 30th and deposit my money and go back to do my bank reconciliation within, right away, I still might not see my deposit. So deposit in transit is literally just waiting for, it's money you're brought to the bank and it just hasn't cleared your account yet. It might have been after 2:30 or in the night. You might have put it in the mailbox. So business owners are given a slot to drop money into a safe at the end of the night from the outside of the bank. So you might have dropped it into that because the bank hours were closed. And then, of course, it's not going to be added to your account until the teller counts it and adds it to your account. So so there are transits. Now, we deduct from our bank any checks that are outstanding. So what does it mean by an outstanding check?
Still we have to pay for that.
Yeah, we haven't cleared the account. So why would we deduct those amounts? Yeah, because when we wrote that check, we already credited our bank account, so that's already reflected in our book balance, right? Because the first thing we do is we do a journal entry, write our check, send it off. If it hasn't cleared the account yet, we're just going to less it to try to get a balanced account. So in this case, we've already reflected it because it's already in the journal. We've already journalized it. So we'll continue through. The cash account in the general ledger appeared as follows on July 31st. So on June 30th, so this is our general ledger for the cash account. It's not our bank balance. So on June 30th, there was the balance of 9770, which matches our last balance. On July 31st, so it's only a 2-transaction month in your ledger, which is probably unlikely, but anyways, we had a deposit of $5,040 and we had a credit of $11,668. Oh, so here they have, sorry, so this is a little bit confusing. Here they're giving us all the debits, all the credits, but they have an additional, kind of a subsection of the ledger. They have a cash receipts journal and a cash disbursements journal. So sometimes, again, this is like, we're talking in the 80s, 90s, before accounting software was too intuitive. So many of the transactions, like we've seen it even in our exams and our homework, cash is used more than any account by far, right?
Yep.
So, because you only pay one phone bill per month, you only pay one gas bill per month, you only pay, you know what I mean, a lot of these bills you only pay once per month. But you pay everything with cash. So cash is used quite often. So a lot of the time back in the day, again, you would never do this anymore because accounting software is just so easy and quick to use. You'd have a deposits, a cash receipts journal, and a cash disbursements journal, which would be your checks. And then at the end of the month, you would put them into the ledger. So this is, yeah, a little confusing. Hopefully not too confusing. But either way, we can see that we made 4 deposits, once on the 8th, once on the 11th, once on the 24th, once on the 31st. And we wrote 3 checks, the 52nd check, 53rd check, and 54th check. That was in the month of July. We have our bank statement. So from the Bank of Montreal, July 31st for Winfield Construction, we have on the left side our checks or charges. On the right side we have our deposits or credits and our balances. And this is not really a typical bank statement because usually they'll just list them all in order, but I guess this is what they're doing for the book here. I guess there's different types of bank statements. In reviewing checks returned by the bank, the bookkeeper noted that check 96 written by Winburn Construction, which if you know, we have Winfield Construction, this is Winburn Construction, in the amount of $420 was charged against Winfield's account in error by the bank. The NSF check was regarding a customer account, Jim Anderson. So prepare a bank reconciliation at July 31st. Prepare the necessary journal entries to bring the general ledger cash account into agreement with the adjusted balance on the bank reconciliation.
I have a question.
Yes.
What are NSF checks?
So NSF checks is, if you heard the term like a bounce checks, it's not sufficient funds. So a bounce check would be an NSF check. So if I write you a check for $1,000 and I only have $500 in my account, the bank's going to give you $1,000 when you go to the bank. 2 days later, when they go to pull the money out of my account, they're going to see they don't have enough money, so they'll go back to you. They're going to take the $1,000 out of your account. They're going to write NSF check minus $1,000, and then the transaction is dead. Then they'll charge me fees and they'll charge you fees for the hassle. And it sucks being on the recipient of an NSF check, but it's just the way it goes sometimes. And it happens fairly often in business. People, like you write dozens of checks, cash flows is, in the business world, cash flow is really everything. So it's not as rare as it sounds. It's pretty rare, I think, in personal banking. You know, you usually wouldn't write a check that you know you couldn't cash. It'd be kind of a jerk thing to do to hand your friend a check that you knew was going to bounce. But in the business world, you're writing like a dozen checks every week, or you know, every other week, depending on your business. So it can definitely happen. It happens fairly often. Fortunately for me, I don't take checks, so I don't have to worry about it. But other businesses do. Most businesses that do business to business, like they don't have their customers or other businesses. This is pretty standard for them to find NSF checks and then go back and try to track down the payment. So we're going to prepare a bank reconciliation, which we can do with this little page right here. So a lot of people lost marks on the midterm for writing for year ended, whatever the date was, on their balance sheet. So you don't have to write for year ended on a bank reconciliation because we're just looking at today's date. Same as a balance sheet, we're just looking at today or that date. We're not looking at a period of time. So again, when you're thinking of an income statement or a statement of changes in equity, that's over a period of time because that is how much money did we make this year? How much money did we make this quarter? A balance sheet or a bank reconciliation is just on this date, what is our financial picture? On this date, what does our bank rec look like? Right? So this title is going to either get you or lose you a mark. A lot of people lost a mark on the titles of their financial statements. I don't know why. I'm not sure, but now the way these bank recs are kind of split, so they're going to be kind of split. You don't have to draw this line. I'm just trying to do it just to show a proof point. On this side is going to be our bank side. So we're going to start with our bank statement. Balance. And this side, so this is our bank side. This is our, you don't have to write these little margin notes. I'm just doing it to, this is our book side, or our ledger side. Whichever one. So this will have our book balance. So on our bank side, what we're looking for, and I'm just going to kind of write it out so you can just have you can think about it. Items not shown in bank statement, but are shown in ledger. Okay, so we're looking for items that are not in our bank statement, but are in our ledger. So we write a check. We apply it, we credit our cash account. It hasn't cleared yet. That is in our ledger, not in our bank statement. That's what we're looking for. So based on that, these are kind of two similar, they're kind of two mirror sides. What is going to be the book or the ledger side going to be for?
Items shown in the bank but not in the ledger.
Items shown in the bank ledgers but not in the ledger.
When I say shown, I probably should have wrote and accounted for in ledger. I mean, this is accounting, but anyways. Items not accounted for in the bank statement, but are accounted for in the ledger. Items accounted for in the bank, but not accounted for in the ledger. That's what I should have written. That's okay. Shown works. So the first thing we do, of course, when you get to your homework or your midterm, you don't have to write that. But if you need to write it in your margins just to remind yourself, you can definitely do that. So the first thing we want to do is get our balances. So our balances can be found where? Where can we find our bank statement balance? On our bank statement. And our final balance, our month-end balance, is usually at the end of the statement, right? So 11,800. Oh, is it 887 or is it? Yeah, 887. Where can we find our book or ledger balance? We'll find our balance for our book balance. We're going to find in our cash account in the general ledger, 11,668. So do these balance? No, so we need to reconcile our account to check to see if they balance. So let's start on this side. So what is the left side's job? What are we doing? What are we looking for? Items that are not accounted for in the bank statement but are in the ledger. So here is our cash receipts journal and our cash disbursements journal and our cash. So here is everything we've recorded in our ledger. So we're looking for things that are not that are in our ledger but not in our bank statement. So let's go ahead and have a look. So, oh, no, two different pages. So let's go and see what is missing. So our first deposit of $12.80 and $12.80. So I can give a little check there. And a little check here. So if it's in our ledger and it's in our bank, are we good on that one? We are, right? That's what we want. We want it to be in both. If it's not in both, that's when we need to add it to our statement. How about $16.75 on July 11th? Yes. $14.45 on July 24th? $640 on July 31st? No. It is not there, right? So we're going to need to add that. But now looking at this, let's see if anyone without me, I mean I can tell you, but let's see if anyone can guess. What is this $13.50? Do we know? In the previous deposit. So this is just our ledger for July. Where we can find anything outstanding from before July would be in our last month's bank rec. So any deposits or checks. So here, they were still waiting for $13.50 to clear. Now, $13.50 is cleared. So all the deposits from before July and the first 3 of July have cleared. We just need to add 64. So why don't we add that in? So once that clears, will our balance go up or will it go down? It'll go up, right? Because we're deposited money. So add deposit in transit July 31st, and it was for $640. And we get a total of 12,527. I just, does someone want to check my math on that before we move on? That's right? Okay, thank you. All right, so we've added it. After we add it, we can mark it down. Is there any deposits now in our ledger that are not accounted for in our bank or on our reconciliation? No, we've got them all cleared. We got the one from last month, and we have the one from this month. So, why don't we have a look and see if there are any checks that are outstanding? So we can deduct So what check should we start with trying to find before we get into the July ones? Yeah, so let's work through it in order. So we have outstanding check 14 for 780. Has check 14 been cleared? No. So we're gonna need to circle it, and let's go ahead and deduct that. So I'm just gonna write OS check number 14, and that is for 780. And I can mark it as done. Now our next check that we wrote was 52 for 1796.
Yeah.
That's cleared, so we don't have to worry about it. Check 53 for 964. No, so let's go ahead and write that in. Outstanding check number 53 for 964. So now we're accounting for it in our reconciliation. We can mark it off. How about check 54 for 382?
Yeah.
So, are there any checks now, anything in our ledger? Because again, the left side, what is the left side of our bank rec for? Anything that in our ledger that's not in our bank statement. So is there anything in our ledger that's not in our bank statement and not on our bank reconciliation? Or did we get all 4 of these checks and all 5 of these deposits accounted for now? Are there any checks that we wrote that we haven't found or added to either the rec or the reconciliation or the bank? No. Are people not wanting to say anything because they see these 2 transactions? They don't want to speak out because they don't want to. Trust me, we're not done. So the second part of this is things that are on the bank that are not in the ledger. So we're going to look at that now. So we can. And someone just double check my math because I will really mess us up if I just make a stupid error. Someone want to check my math, please?
Yep, that's right.
Okay, thank you. So we added back any deposits that hadn't cleared the bank, and we deducted any checks that haven't cleared the bank. So are we done? Do we have balance bank and book balances? No. The reason we don't have balanced bank and book balances is because these 2 transactions, right? So in reviewing checks returned by the bank, The bookkeeper noted that check 96 written by Winburn Construction in the amount of $420 was charged against Winfield's account in error by the bank. The NSF check was regarding a customer account, Jim Anderson. So take a second and think about this, because this is where most of my students get confused. An NSF check. So when would it negatively hit our bank?
When we don't have a fund or cash.
What's that, sorry?
When we don't have a cash in account.
Well, would that negatively hit our bank though? Or would they just not run they would just, if we had enough cash in our account and we wrote a check, that would negatively affect our account, because if I have 2,000 in my account and I write you a check for 1,000, once it clears, my account will be less 1,000.
Yeah.
But what if if I give you a check for $1,000 and I've only got $500 in my account, when you go to your teller, when you go to the bank, or when you, so a lot of people, depending on their credit score, if they mobile deposit their check, they get instant access to that check, right? So usually, some people might have $100 instant access, some people might have $600 instant access, some people might have like unlimited instant access, right? Everyone has different amount on their account, depending on your credit score, your age, the money you keep in your account, all that information. If you've ever written a check to yourself fraudulently, you would probably have 0. So if I write you a check for $1,000 and you have full access to your account, and so your teller gives you $1,000 immediately, but I only have 500. Eventually, that comes back from my account. They go to pull 1,000. It's going to send an NSF. It's going to bounce. That's what we call it. So the not sufficient funds goes back to your account. You already had the 1,000 in from before. Now they say, okay, the 1,000's out again. So you get a negative 1,000 transaction for an NSF check. So that is when. So if we have an NSF check, so when do you get the NSF fee, $1,000? It's when the check bounces. But who wrote who a check? I wrote you a check. So if I have an NSF account on my bank, a customer wrote me a check. I cashed it. I got my $465. And you can kind of tell from the date here, that would have happened in June. And then on the 2nd, finally, they went to the other bank. They realized that he didn't have enough money. Jim Anderson didn't have enough money. They took it back out of my account. So, for this one, we need to add that to our bank balance, or we need to deduct it from our bank balance. Or, pardon me, our book balance. That's right, we need to deduct it from our book balance, because we need to go and reinstate that receivable. Does Jim Anderson owe us $465? Do you clear your bills if you write a check that's going to bounce? Does that resolve you of any obligation to pay your bills? No. So does Jim Anderson still owe us that money? Yeah. So basically, the accounting procedure we would just reverse the transaction. So when we got paid, we would have debited cash and credited account receivable. When the money went back, we're just going to reverse it. We're going to credit cash and debit accounts receivable and reinstate his receivable. But we haven't done that yet because we didn't know it was going to bounce until we got our bank statement. So we need to make that entry. So if we're going to credit cash, that means that we would deduct it. So let's see how about this one? So 420 was a different company's check that was charged against us. So they wrote a check, they charged it against our account. What do you do? What are you going to do when you get your bank statement in the mail back in the 1980s and you finally wait for your bank statement to come and you see what you got? What's that? You're going to walk over to the bank, you're going to say, this isn't my check, and what is the bank going to do? They're going to add the money back into your account. So, we need to add the money back to our bank statement balance. Our book balance, sorry. But I guess, sorry, I should mention in the meantime, we need to actually less it from our book balance. And why are we lessing it from our book balance? Yeah, it was taken out of our account. We actually haven't gone to the bank yet and reversed it. So we have no adds, we only have deductions. First one we'll do will be the NSF check. For $465. And the second one, we need to deduct the amount that the bank took out of our account by accident. And that is that amount was for $420. So what is our adjusted? And I guess we can have a look now. So we've now put these on our recs. Is there anything that is on our bank statement that we haven't either checked to make sure is in our ledger or put onto our rec? No, everything is checked off. So what is our adjusted book balance going to be? $10,783. So now it just wants us to journalize. So which side of this would we, which transactions would we journalize? If we just take a second and think about it. If it's already in our ledger but not on our bank statement, do we need to journalize it? And no, why is that?
Because we already have.
We already have. If it's in our bank statement but not in our ledger, do we need to journalize it? Yes. And why is that? Because we haven't journalized it yet, right? So, if you're confused about journalizing, if you have additions to your book balance, what will you always debit?
Sorry?
If you have additions to your book balance, what will you always debit? Cash. If you have deductions to your book balance, what will you always credit? Cash. Exactly. So let's go ahead and do that on July 31st. So the first one is the NSF check. So we, like I said, we're always going to credit. So someone writes us a check, it bounces. Someone writes a check to clear their account, it bounces. We need to credit our cash because the bank took it out. What are we going to debit? Accounts receivable, because that customer owes us that money again. To reinstate account with Jim Anderson. Very good. Then on the 31st, we have one more transaction. We know that it's a deduction, so what do we know we're going to credit?
Cash.
Cash for 420. Can anyone guess what we would debit?
Accounts receivable.
Yeah, who would be the receivable? Bank, yeah. Because the bank made an error. So we need to go down to the bank, call them and say, reverse this right away. They'll reverse it, and then we'll just make the transaction. We'll just do another journal entry to exactly the reversal of this. Oh. Now, one last question before we call this an example. What would happen right now if we were to do a bank reconciliation right now with our new journal entries entered?
It would be the same.
Would our reconciliation look exactly the same?
Or, I guess it would equal.
Our book balance would now be this amount, right? It wouldn't be an adjusted book balance because we've entered this into our ledger, so our ledger will be updated. Now our balance will be this amount. This side will be exactly the same because nothing has hit the statement. But our new book balance would be 10,783 after those entries. As soon as we enter them, we're going to post them to our ledger. We'll update our balance in our cash.